and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will connect with our experts and you get a chance to connect live with us on the WhatsApp number that will be flashing on the top of your screen. But before that, let's have a look at what the markets are up to. So Cheryl, markets are clearly matching the color that you are wearing right now. Nifty and as well as Bank Nifty under pressure, but that's Vedanta that's ruling the charts today.
Absolutely. A very good morning to you, Srishti. And like you mentioned, yes, you are seeing a negative move coming in the benchmark indices. You had Nifty that actually slipped below that 19,500 mark as well on an intraday basis. Now it's actually reclaimed those levels as well. Talking about Nifty Bank, that one is also moving in tandem with the benchmark indices. You're seeing about 275 points cut coming in on the Nifty Bank. Let's take a look at what the broader markets are doing. Are they able to hold on to their trend of positive gaining streak? And there you go. In fact, mid-cap index is at the day's highest point. Let's take a look at what small-cap index is doing. That one also is near the day's highest point. So yes, strong moves coming in for the broader markets. Talking about the list of gainers then, you have HUL, HCL Tech as well as Asian Paints that are among the top gainers on the Nifty at Adani Ports as well as Bajaj Finance. But on the flip side, on the losing end of the markets is the auto pack. There's actually seeing a sharp cut, 3.5% downtick coming in for Eicher Motors. You have ONGC that's seeing downtick of about 3.7%. Hindalco, Maruti, Grasim, all of them are losing in today's trading session. If you look at the advanced decline ratio, as of now, it's still a tad bit towards the declines if you look at the advanced decline ratio. But yes, just early hours of the trading session. Talking about the sectoral losers, then you have auto index as the top sectoral loser, energy index, metal as well that is seeing some sort of a downtick. But on the flip side is the PSU bank index that's actually bucking overall market weakness as well, and that's one is the top Nifty top sectoral gainer today, Srishti.
Okay, so that's how the markets are up to. Weakness in the benchmark indices, but let's shift focus to Vedanta then, and that's going to be a buy now, sell now lens topic today because Vedanta is ruling the charts with the gains of over 4.5%, and that's after the company announced the demerger of its diversified business, bifurcating its business into 6 new companies. With this demerger, it aims to cater to the growing demand of commodities, energy and technology across the world. But what does demerger mean for Vedanta and how are brokerages seeing this post this announcement? Let's get in more details from our colleague Somit Sarkar.
Well, Vedanta demerger is the biggest news that has come in post-market on Friday, and what the company is doing is they are demerging one of the entities into 6 different units. Now, the original listed Vedanta will continue to hold the stake in Hindustan Zinc. They will also hold the semiconductor business, the display business, and the Vedanta stainless business. Now, the other unit, the new unit that is Vedanta Aluminium, will hold the aluminium business, and it will also hold the 51% stake in Balco. Then there is Vedanta Oil and Gas, which will have the K in India business. Then there is Vedanta Base Metal, which will have the copper and the zinc international business. Then there is Vedanta Steel, which will hold the iron ore and the steel business, and lastly Vedanta Power will hold the power units of the company. Now the company has kept the demerger ratio quite simple. For every 1 share that a shareholder owns in Vedanta, they'll get 1 new share of each of these new entities going forward. Now the company will require approvals from SEBI, exchanges that is BSE and NSE, from NCLT also, and they're expecting all this procedure to complete by the first half of financial year 2025. Now the positive thing coming out of from this demerger is value unlocking, because if you see currently Vedanta's businesses are saddled with huge holding company discount and are sometimes significantly undervalued. For example, if you see currently Vedanta's market capitalization, that stands at close to 82,700 crore rupees, while its stake in Vedanta in Hindustan Zinc in itself valued at close to 84,400 crore rupees. And post demerger, individual businesses could see a better value proposition going forward. However, the grey area remains when it comes to the net debt of the company. Now, how the debt will be divided among these companies are still not known. The company's total net debt stood at close to 59,000 crore rupees and seeking 75% approval from the secured creditors on this net debt. Net debt division could be one of the issues when it comes to this demerger. Now, earlier also we have seen Vedanta struggling getting approval from secured creditors when they were looking to transfer the reserves. So this is the grey area that continues to remain when it comes to Vedanta's demerger. How are the businesses valued? Now, the Vedanta entity, the standalone entity which will have the stake in Hindustan Zinc, is the most valued at close to 58,000 crore rupees. That is the enterprise value. The aluminum business is the second most valued at close to 44,000 crore rupees. Then comes the oil and gas business, which is valued at close to 22,000 crore. And the least valued business among the Vedanta group is the power business, which is valued at close to 4,600 crore rupees. Also, Hindustan Zinc came out with a similar announcement where they're looking to separate each of the entities into zinc and lead business. Then there's the silver business and the recycling business. Now, analysts have not given individual value to each of these businesses, but zinc and lead and silver are the most valued businesses in Hindustan Zinc currently.
All right, thank you so much for that, Somit, for actually outlining what exactly has Vedanta done with this particular move of demerger, and they're expecting that demerger by FY25. But let's ask our experts, based on this news flow, should you look to bet actually on Vedanta and the entire group? We have Rajesh Agarwal as well as Kunal, both are joining us on the show. Very good morning to you, Rajesh, as well as Kunal. Thank you so much for joining us on ET Now and Buy Now, Sell Now. And Rajesh, coming first to you, no doubt that you have Vedanta that has taken this move of demerger into 6 businesses, splitting their verticals as well. But do you think with this move, the concerns around the debt actually goes away? Do you think that based on this particular news flow, you can relook at Vedanta as an investment opportunity?
Good morning, Cheryl. Good morning, Srishti. Good morning, Kunal. Vedanta, the big news after market hour that came on Friday was a real positive shocker, I would say, because definitely the stock was highly undervalued, despite the fact that it held so many verticals: oil and gas, metals, minerals, copper, everything under its belt, but still it was not getting the valuation. And that can be clearly seen by the fact that the market cap of Vedanta was almost equal to the holding it held in Hindustan Zinc, other businesses being of zero value if you take the market cap alone. But the problem is with the debt. The company has huge debt, almost 59,000 crore rupees, and almost $2 billion of worth of debt is going to mature, come for a payment in 2024, and there is no clarity as such how that will be done, and no clarity that how the debt will be divided into different companies. Yes, there would be value unlocking. People looking at simply investing in oil and gas would go with Vedanta Oil or something like that. But still, it will take at least 12 to 15 months period time to the things to materialize, and that's a long way. I'm not in a hurry to buy at this point of time. Maybe we should wait for some clarity on debt before taking a bet. In the longer term horizon, yes, there would be value unlocking, but it's a very long call right now. Right now, if for some reason the stock touches around 248 to 50, I would suggest to put profit.
Okay, so that's the fundamental take coming in on Vedanta. Won't be a buyer at this point in time, and after the jump that we have seen today. As per Rajesh, the valuations look cheap, but the debt concern remains around 240. He's advising to book profits. But Kunal, coming to you, and what a volatile stock Vedanta has been, because just 2-3 days back the stock was very close to that 200, 205, 7 odd mark, and now all the way up above that 230 odd mark. So purely on the technicals, would you advise somebody to take positions in Vedanta, or would you also go with a stay away kind of a recommendation?
I think we've been advising to stay away from the stock over the last so many months. Even at the point when the stock was at 300, 330 mark, that was I think just about a few months back for Vedanta, because the stock has been extremely volatile, a big underperformer with respect to most of the other metal counters, and I would still believe that even in this last 2 days of bounce or a rally for the stock price, it doesn't change the chart patterns quite dramatically for the stock on the long term basis. So I would maintain that trajectory for and the view for Vedanta, that on bounce for traders who've been long on the stock, if in case they get the stock closer to their cost price, I think that would be a good time to try and exit the stock and come back into the traditional names. Even if you're looking at more focused approach towards the metal stocks, I would still believe that the likes of JSW Steel, Hindalco, Tata Steel, etc., these could be much better bets.
All right, so that's the call coming in from both of our experts when it comes to Vedanta. Definitely not too excited about that particular counter, at least in the near term. But on that note, we slip into a break on this edition of Buy Now Sell Now. When we come back, we'll start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now Sell Now on ET Now, a show where we get you answers for all of your stock-related queries. Remember, viewers, you can connect to us on the WhatsApp number that will be flashing on the screen very shortly. Do remember to mention your name, the stock that you're looking to invest in, the name of that particular stock. Also mention the buy price, the quantity if you've already invested, as well as the time horizon that you intend to hold a particular counter, because in that way our experts will be able to help you better. And talking about our experts then, we have Kunal Bothra as well as Rajesh Agarwal on the show. Once again, good morning to both of you. And let's kickstart taking all the stock related queries then. And this one is coming in from Satya. And Kunal, he wants to know if it's a good strategy to buy Ujjivan Finance right now. As of now, he's got around some shares at a price of around or rather, I believe he's talking, he's talking about Ujjivan Small Finance Bank, the fact of the merger with Ujjivan Financial. He's wondering whether it's a good move based on that particular development, the fact that if you are going to look at buying Ujjivan Small Finance, you will be eligible to even get Ujjivan shares.
Well, I think it's a good strategy, because I think both the charts now, technically speaking, both Ujjivan as well as Ujjivan Small Finance Bank, both of them are looking very attractive. I would believe that looking at the way the stock has run up the last, I think, 3 months of consolidation, the entire month of August and September for Ujjivan Small Finance Bank, and the very recent breakout, I think 2 or 3 days back, the breakout which had happened for the stock looks very strong. So you can consider buying the stock.
Okay, can consider buying Ujjivan Small Finance Bank. We're moving on. Rajesh, the next query is on a tire name, that is CEAT, and a viewer named Ramesh from Kerala has bought 100 shares at a price close to 2,600 rupees. What's your advice for this particular counter? He wants your advice for the future of the stock price. Rajesh, this query is for you. Okay. Kunal, if you can take this up and advise on the technical front, how is CEAT looking to you?
Well, I think many of the tire stocks are actually going into a downtrend. I think if I'm not wrong, even the likes of Apollo Tires, etc., it's come back towards a multi-month low, 3-month, 4-month swing low for themselves. CEAT also on the short-term charts is going through such a kind of a grind. I think from 2600, 2640, the stock is back at 2100 mark. So, price-wise or in terms of indicators, maybe the stock has come back towards a strong support territory. But whether the entire tire pack could see an immediate recovery, I still have my reservations over there. I would still believe that they may take a lot of time to try and make a comeback. There could be more of a time-wise consolidation over here. So your time frame matters. If you're in from long-term play, then you can start nibbling at current levels. But as I said, that these stocks can have a possibility of another at least a 5 to 10% downside. You can capitalize on the downside by adding further in case if the stocks drop.
Right, this one is coming in from Badri. He's writing to us from Bangalore. And Kunal, this one is for you. 150 shares of ABFRL at a price of around 265 rupees per share. He's saying he's been holding on to this counter for the last 1 year, but he's virtually done absolutely nothing. Wants to know what should he do right now with this counter? Look to book some losses or continue to stay put?
Well, I would suggest to look to maybe book some losses over here and look to buy back in case if the stock dips back towards 185 or 190 mark. I think that could be a better strategy. You can probably try and book the stocks closer to 215 to 25 range, and then look to buy back at 185 odd kind of a mark, because I think that's the kind of a trading range the stock should get more ranged into possibly in the next couple of quarters. I don't expect a very strong uptrend to the stock price, neither a major correction to the stock price. So even if you've bought at 260 odd levels, I think it's a better strategy to exit here, look to buy back lower, and then keep on trading into this 40-50 point range.
Okay, Kunal, let me take this one from you. This one is from a fan of yours named Venkat Rao, and he wants your advice on 2 counters. At what price point he can go ahead and enter BDL as well as Som Distilleries? He's looking to stay invested for the next 2 years.
Thank you so much for that. For BDL, I think maybe closer to 950 could be a better zone to buy. Now, I think over the last 3-4 weeks, I've been highlighting that many of these defense stocks, I think, have gone through a correction. The correction may probably last for a longer time for these stocks in terms of price as well as in terms of time. So maybe over the next 1 or 3 months, you could probably expect BDL to come back into that zone of 900, 950 range. So that could be a better zone to buy or nibble into the stock price. Some distilleries, on the other hand, I would strongly believe that you can consider buying even at current levels. My sense is that the stock is going through a very strong uptrending mode, and hopefully in this leg of uptrend, the stock should scale past significantly higher. But for some distilleries, I would also advise that keep a more longer term time horizon, say for the next 1 to 3 years at least. If that's the case, then I think you can go ahead even at current levels.
All right. The next one is coming in from Amit Sood, and this one is for you, Rajesh. He has 2,000 shares of Phenol Industries, which he is holding for the last 25 years. He's saying that he got the stock in IPO allotment, and then he built on the positions via bonuses, bonus issues of the company. So now he wants to know whether he should continue to hold on to Phenol or look to book profit and invest somewhere else altogether.
First of all, congratulations for holding such a long period of time and having such good amount of gains. And I think still this stock warrants a hold because the company has been doing very well. The numbers were somewhat bad in the recent past, but this performance has started improving from the last 1 or 2 quarters. And I think the kind of demand which we are witnessing in the pipe business, especially from the infrastructure and housing space, is going to help this company. Maybe a target of 250, 260 in the next 1 or 2 quarters is quite possible. These targets are just because if you are looking for booking profits, else I would say stay put with the stock.
Okay, Rajesh, the next query is on one of the recent listing named Avalon Technologies. This query is from Gopinath, and he's wants your suggestion that whether or not he could go ahead and buy this counter for a long-term period, how the fundamentals looking like, and any price point that you can suggest for the fresh entry.
This is for me?
Yes, Rajesh, for you.
Yeah. I don't think it makes quite a sense to buy Avalon Technologies at this point of time. Being a recently listed company, no major data is available. And the second part is tech stocks are in a pressure these days, and it's better to buy large cap names like Infosys or TCS for a longer term horizon. Even a happiest mind would be a better bet rather than going for Avalon.
This next one is also for you, actually, Rajesh. This one is coming from Rajendra. He's writing to us from Mumbai. And he has Bharat Forge at a price of around 850 rupees per share. About 100 shares is what he has of this particular counter. He wants to add some more, about 100 more shares of this counter and hold it for the next 3 to 5 years. Do you think that it makes sense to do that right now? Add some more of Bharat Forge or look at some other counters altogether and continue to stay put with Bharat Forge for 3 to 5 years?
See, if somebody is looking for 3 to 5 years, Bharat Forge can be a very good bet. The company is facing some issues from the US side because of Class 8 trucks and all. But with the kind of product portfolio this company has, it is even in the defense space also, the numbers are improving. I think one can go long at this price. This is a very attractive price for longer term horizon. One can go long.
Kunal, the next query is from the FNO space. Nagesh from Bangalore is planning to buy 2 options. Firstly is Vedanta 230 put option for the October series. So we were just discussing about the counter. So will that be a good strategy to go ahead for a reversal out here? And also he's looking to buy a call option of Reliance Industries, that 2320 call option. Wants your advice on both of these.
So I'll suggest to avoid Vedanta. The stock is in a lot of news flow. Buying a put option at current levels may turn out to be a good strategy, but in case if the stock bounces further, as I mentioned, that possibly the stock may come back towards 245, 250 mark. So you may lose out on the initial buying premium for the put option. So it's always better to try and avoid this kind of a name. Reliance Industries, on the other hand, I think this could be interesting because the stock has come back towards a very interesting juncture on the technical chart. So the stock is showing signs of RSI divergence. on the hourly charts specifically, which means that at current levels the stock may form a durable base at current levels. But I would probably believe that buy the call option maybe after waiting out for a day, in case if the stock breaks past about today's high, which is around 2340 odd for Reliance on the spot levels. That could be a time where you may look to buy. So you may probably be buying the call option at a slight higher premium, but that could probably be a confirmation that a near-term bottom is in place for the stock.
All right. This next query that I have is coming from Hema Vamsi, and the viewer has BPCL around 101 shares at a price of 420 rupees per share, holding for the last 6 quarters. In fact, what's your take on this, Rajesh? Does it make sense to stay put with BPCL still, or look to exit?
You said BPCL, right?
Yes, BPCL.
I think one can go stay long unless until one is looking for short-term swing trades. But for a longer-term horizon, the kind of intrinsic value, the kind of petrol pumps they have, the refining infrastructure. This is just a problem because of crude going around 95 odd dollars. But now this crude is pulling off. And I don't think in the near future crude is going to cross 100 unless and until something major happens in the geopolitical scenario. One can continue to hold. Company gives good dividend also. If stock comes to around 370 odd levels, one can book profit.
A hold coming in on BPCL for now, but with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, show where we get you answers for all your stock related queries. And today onto the show we have Kunal Bothra as well as Rajesh Agrawal with us to guide you better. Moving on to the next query then, and Rajesh, this one is on GBK Power. All these power stocks have seen a stellar rally, and for GBK Power, a viewer named Sunita Rai from Bangalore entered at a price of 5 rupees. So having stellar gains at this point in time, and even today the stock is locked at an upper circuit. So good time to book out profits. How do you see the fundamentals of this particular company, or with the kind of a rally that we are seeing, you will advise to continue to hold on?
See, I would say book partial profit, at least take out the capital you have invested and ride with the rest. Because as far as valuations are concerned, I think it can go up to 15, 16 odd rupees at this point of time. But still, I would suggest to book partial profit. And if you want to be in power sector, I think CESC or Tata Power is a better bet than the GBK Power on valuation parameters.
All right. This next query that I have is coming in from Raman Roy, and he wants to know about IDBI Bank. 4,500 shares he has of this particular account, and he's holding on to this one since the last, since 2008. Now he wants to know what's the prospect of this particular account. I'm not sure what's the buy price at this time, Kunal, but what's your take on IDBI Bank?
Well, I think if you bought it 2008, which means the stock was more than 3 digits or the higher end of the three digits for itself, I think 100, 150 odd mark as far as I can remember. Currently the stock is at 70, 71 mark. I would recommend a hold as of now for IDBI Bank, because my sense is that many of these PSU banking stocks, they are actually going into the second leg of a strong uptrend, something which started off in the second half of 2022. So I would recommend a hold on IDBI Bank as of now.
Okay, Kunal, the next query is from B. Soumya, and looking out for short-term targets on 2 counters. Firstly is JM Financial, where she has bought the counters at a price of 79 rupees 25 paisa, as well as HFCL from a price of close to 69 rupees. Looking out for short targets in these.
See, I would recommend to hold both of these stocks now. HFC, I'll start off with that because that's a stock which on the monthly charts is actually forming a triangular pattern. Now, this could be a big breakout potential for the stock over the long-term prospects. Now, even from a short-term play, I would look at 82, 18.5 as a target for HFCL from a very short-term kind of a play. But as I said, that if the triangular pattern gets completed for the stock, then we may expect the stock to move up significantly higher. Just as a price comparison and a pattern comparison, JSW Energy had formed a very similar kind of a chart pattern. So you may want to look at the price similarity over there. For JM Financial also, I think the stock has come back to a mild support zone from a recent correction of 92 and a half odd mark where the stock made a high. So I think even at current levels, I would expect the stock to show signs of a recovery. 92 plus could be a short-term target for GM Financial.
All right, this next one that I have is coming from Sheshma, and she wants to know about Tata Elxsi as well as InfoEdge, Kunal, for the period of 6 months. Tata Elxsi buy price 7,920, InfoEdge buy price 4,230. Should she continue to stay put with this one or look to exit?
I would recommend to exit both of these names. InfoEdge is making new swing lows on a consistent basis. So I think even at current levels, the stock has managed to break past about the August lows of 4,150, 160 mark, which means that there could be more impending correction into the stock. Even for Tata Elxsi, the worry is that the short-term charts indicate the stock forming a bearish crossover on the daily charts, the 50 DMA crossing below the 100-day moving average. So that also is a sign of weakness, which could continue for the stock over the near term. I would suggest an exit.
Okay, Rajesh, the next query is coming on SRF. Ajay from Bangalore has bought 50 shares at a price of 2,300 rupees at a loss right now. But do you believe that the stock can see some bit of a recovery? And what's the outlook on this one?
Long term, yes. There has been problems with the chemical sector as such, and that's the reason almost every stock faced pressure. But going forward with the kind of product profile, the diversified company it is, I think one can go long at this price also for a time horizon of maybe 1 year or 18 months, can be sitting on a good return. So one can continue to hold.
The next query that I have is coming in from Sagar. He wants your view on Link Limited. I'm unsure if you track this particular counter. It's a stationery company, Rajesh?
Link Pen, I suppose it's right.
Yes. So he's saying that he's holding this stock from the levels of around 225 to 230, around 1,500 shares of this one. He's saying the performance of the company so far has been good when it comes to the business performance of the company. But he wants to know that with the pace of digitization as well as the way how the entire sector has been moving, do you think that this company has more prospect to to grow from here on?
Of course, the company has been doing very well. If I'm not wrong, he's talking about Link Pens, right? The company has been doing very well. The numbers are very satisfactory. Balance sheet is very strong. And I don't think digitization is going to halt the growth of pen, usage of pen and etc. So one can continue to hold. For a medium term, we have a target of around 850, 880 odd rupees. But for a longer term horizon also, it's a hold.
That's a hold coming in on Link. Moving on, and Kunal, the next query is from Renu from Kerala, and she wants to know, are IOC as well as HAL good buys at current market rise?
I would not recommend a buy on IOC. I think the stock has been an underperformer. In fact, on the daily charts, the stock is on the verge of giving a bearish crossover where the 50 would probably be crossing below the 100-day moving average. So even with crude topping out or at least showing signs of some retracement, the charts for IOC are still into that negative territory. So I would probably skip this one. HAL actually could be a good contra bet at current levels and wait out for maybe another dip of some 70-80 points into the stock price. So the previous low was around 1885. Stock is at 1940 mark approximately. In case if it dips down to that 1880 mark or slightly below those levels, that could be a zone where you will look to average or add further.
From Anjali Kunal, LIC Housing purchased at levels of 397 rupees per share. She's asking whether she should go ahead and book profits or hold on to the counter. 1,400 shares is what she has.
I would recommend a hold as of now. The stock is showing signs of a classical turnaround as well as a breakout. So in the series of lower highs and lower lows, that pattern has breached for LIC Housing. And now it looks very attractive. If I'm not wrong, this is the 6th or the 7th consecutive month of price trend. Even though the pace of rally has been very slow and gradual for the stock price, I believe that more upside should be left for the stock over the long term. So hold is what I would recommend.
Okay, another one for you, Kunal. This one is on Nykaa, and viewer named Ramesh wants a 6 months investment horizon view on this one. He's looking to buy 500 shares at current market price. Will that be a good move?
Well, Nykaa is something which I think on the short-term charts has popped up as a potential breakout. The stock has confirmed a 200 DMA breakout on the daily time frame. It's crossed back above levels of 140, 145, which which was the previous resistance. In fact, for the first time, I think, if I'm not wrong, the stock on the monthly charts, or rather on the quarterly charts, is also showing signs of a breakout for itself, making a slight higher swing high for itself. So this could probably be a potential candidate of a turnaround. But stocks like Nykaa, etc., are very high beta in nature, so you'll have to have a proper risk mitigation strategy in that regards. But I would recommend a buy at current levels. It could be a good anticipatory breakout.
All right, the next one is coming in from Ramki, writing to us from Delhi, and this one is on the newest kid on the block, that's JSW Infra. Rajesh, he wants to know whether he should go ahead and invest around a lump sum amount of around 2 lakhs or so in JSW Infra. Do you think it's a very good business that one can fundamentally look at it right now for the longer term?
Depending on its time horizon, I would say if somebody is looking for a period of 18 months to 24 months, yes, it can be a good buy. It has given a good listing today, almost 30, 40 rupees from its IPO price. But still, I think one can buy the stock for a longer term horizon. For short term, it's difficult to say the price movement at this point of time. But for longer term, fundamentals justify a buy.
That's the take on JSW Infra. But Kunal, the other query is on two large cap names. Queries from Bishakha, holding 10 shares of Hindustan Unilever from a price close to 2,600 rupees. So at my loss at this particular counter, but he also has 20 shares of Asian Paints from a price point of 2,900 rupees. So good time to move out of both of these counters and rather invest the money in Reliance, which has corrected a lot.
So the first step could be good, that you may look to consider booking out profits into both of these names, Asian Paints, as well. My sense is that many of these large cap stocks are getting into a zone of a corrective phase for themselves. So HUL, many of the other FMCG stocks have gone through a grind in the last 2-3 months, and they are not seeing an immediate recovery, which means that there could be more possibility of these stocks going into a further leg of correction. Even the likes of Asian Paints, I think, would probably get into a further correction. It's still trading below its critical moving averages. I think the 50 as well as the 100 moving average. That's a concern for the stock over the near term. So I would recommend an exit. But then investing into Reliance at current levels may actually turn out to be a good strategy. I would probably recommend to even look at HDFC Bank as a good potential candidate of a turnaround. So both of these names could be better bets.
All right, this one is for you, Rajesh. This one is from Akhil. He's been waiting for a while actually for you to come on the show and so that he can ask you a query. He has a query on Adani Ports. He's saying that he already has some Adani Ports at a price of 610 rupees per share in his portfolio. He wants to know whether it's advisable for him to go ahead and add some more of Adani Ports in his portfolio for the longer term at current market price. Also, the other one that he wanted to know is if you could suggest a good IT large as well as a mid-cap stock that he can look to invest right now.
See, as far as Adani Port is concerned, I think the valuations are good. It's one of the largest logistic company, I would say, in India, and it's doing very well. But the thing is, is facing some kind of issues from the last 1 year or so, and which we are all aware of. So it depends on your risk appetite, whether you want to take that risk and continue holding or add that to it. Fundamentally, it is a good buy at this point of time with a target of 1,000 plus odd levels if something on the group side doesn't go wrong, I would say. So it fully depends upon your risk appetite. As far as IT companies, investment at this point of time, as I said sometimes back, in the large cap space, we'll are looking at TCS and Infosys. In the mid cap space, we looking at Happiest Mind, which are doing very well, not only in that normal IT space, but also in cloud, AI, ML, and all those things. And these things are going to be things of the future and are going to give good returns. The balance sheets are strong. They come out with buyback every year, I suppose, or every now and then. And that's a very good thing, I would say.
Okay, that's the advice on IT companies. But Kunal, the other query is from pharma space, that is on Unichem Labs. John from Chennai has bought 100 shares and he entered the counter 2 years back, close to 203 odd levels, and been a doubler for him right now. So good time to book out profits, or should he continue to hold on?
See, I would recommend to hold on to the stock as of now. My sense is also that the stock may see some bit of more volatility going forward. So there could be a possibility that the stock may retest the levels sub 400 mark, say in the next few weeks, because of the way the stock has corrected at the start of the month of September from 450 to sharply falling towards that 400 mark, and then mild recovery for the stock, which means that possibly the stock may get into a double test of the previous lows. But because your cost price is significantly lower and you've managed to hold on to the stock, I think you can probably try and encash onto riding on to the much larger degree uptrend for Unichem Labs. So short-term volatility, but on the medium to long-term charts, the stock looks very attractive. You can continue to hold on.
All right, so that's the take coming in on Unichem. But on that note, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we'll continue taking your queries, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related query then. And this next one is coming in from a viewer who's not mentioned his name. Okay, Sudha is the name, and Sudha wants to know about MCX Metro brand or Campus. Which one of these counters do you think makes sense to invest in the longer term, Rajesh? And also, if you'll be able to advise if now is the right time to buy in any of these counters, if you advise a buy.
See, Metro looks better out of these, but it has run up quite a lot, and today only it has run up quite a lot. So I would say wait for some correction to happen to invest in Metro. And as far as MCX is concerned, we saw correction after the news came in that SEBI has taken some time to allow them to move to the new platform. But one should remember that transformation to new platform is going to happen whether today or maybe tomorrow. So if somebody wants to take a risk of a medium-term time horizon, maybe 6 to 9 months, one can go long in MCX also.
Moving on, and Kunal, the next query is on ABFRL. Anish from Kerala has bought 100 shares at a price very near to the all-time high levels of the counter, that's close to 330 rupees, and sitting at a loss at this point in time. Wants to know should he continue to hold this particular counter or make an exit now, because for the past 6 months also we haven't seen much of a move in a stock like ABFRL.
Yeah, not much of a move, and I think after that sharp selling from 350 levels for I think 3 or 4 quarters on a trot, the stock had shown a recovery, but then that recovery also was very feeble with respect to the magnitude of sell-off for ABFRL, which means that the stock may get into a time-wise correction. So my view still remains the same, that I think at current levels you may look to exit and then look to buy back in case of the stock dips back towards that 185 mark.
All right. Kunal, another one coming your way. KVS Money is writing from Bangalore, and UTI AMC is a counter which is holding about 40 shares, or rather 140 shares at a price of 554 rupees per share. He wants to know whether he should stay put with the UTI AMC or look to exit this one right now.
I think I would recommend a hold on the stock as of now. Looks attractive. The stock is trading above the 50 and the 100 moving average. So price trend wise, I think looks quite okay. You can continue to hold on.
Okay, but with this, viewers, let's kickstart taking all your queries in the rapid fire session. And the first one is for you, Kunal. The query is from Ravi, holding 200 shares of Kalpatru Power at a price of 401. Good time to book out profits or continue to hold on?
I would recommend to hold on.
Okay, Chandrasekhar wants to know about Gravita India. Rajesh, for the next 1 year, does it make sense for him to stay put with this? The buy price is about 560 rupees per share.
Hold the stock.
Kunal, what's your view on Federal Bank? Ramesh from Kochi, holding 5,000 shares from a price of 76 rupees. Good time to book out profits and move to another counter. He's a long-term investor.
Be patient, hold on to the stock as of now.
Okay, Arun wants to know NMDC buy price is 149 rupees per share. Should he continue to stay put for the longer term, Rajesh?
It's a hold and even a buy at this point of time.
Kunal, the next query is from Dasari Radhi from Vijayawada. Wants to know good time to buy Heritage Foods at current market price with a 1-year investment horizon.
Well, yeah, you can consider buying the stock at current levels.
Naresh from Hyderabad wants to know about Snowman Logistics Canal. What's your take on this one? Is it a buy right now?
I would recommend a buy only about 57.5 or 58 mark.
Rajesh Pradeep wants to know, good time to enter any of the counters named REC, PFC, NHPC at this point in time?
Avoid all of them.
All right. The
Avoid.
next query is from Yugandhar from Hyderabad. He wants to buy HDFC Bank as well as SBI Card. He wants to know, is it a good time to buy these counters? Also, he wants to stay put with them for the next 3 to 5 years. What's your take on this, Rajesh?
Both of them are good at this point of time for a time period of 3 to 5 years.
Rajesh, Rita is holding more than 3 lakh shares of IDFC First Bank from a price of 40 rupees, wants to hold this for the next 2 to 3 years. So what will be your advice?
I would say book partial profit at this point of time. If it goes to around 80-85, one can re-enter at this. But at this point of time, book partial profit.
Kunal, Poonam Anand wants to know about Grovel, 300 shares at a price of 135 as well as Gokul Agro. Not sure you track it, but the buy price is 140.
I track Grovel, would suggest a hold on the stock at current levels.
Okay, but with this, viewers, we are completely out of time in this edition of Rapid Fire as well as Buy Now, Sell Now show. Thank you so much, Kunal, as well as Rajesh, for joining us today onto the show and helping all our viewers with their stock-related queries. But with this, viewers, it's a goodbye from me and Cheryl and the entire team who put this show together. Thank you so much for watching, but don't go anywhere. Markets at noon will take the action ahead.